with this first slide, I wanted to touch basically on the wide field of logistics in general, because it comprises several different sub-segments, as you can see here. So basically, logistics demand in general is derived from various different types of industry types. So you've got the commerce side, you've got the distribution side, and you've got the manufacturing side, which all drive different parts of the logistics and light industrial space, to say so. And what is interesting, if you think about what COVID-19 has done to each of these fields, what COVID-19 has caused the retail industry to suffer, there was quite a few headwinds on the manufacturing side, and also global trade and the distribution side has seen some headwinds. You might think that logistics should have suffered as a consequence of COVID-19, but I'm going to spoil that now. The spoiler, it hasn't. It clearly hasn't. And I'm going to touch on that later, but I wanted to get into each of these fields first before we move on. So maybe a few words on commerce. That's quite an interesting one, because clearly it is the online retail component, which has seen a tremendous time during the pandemic crisis, and you've got the brick and mortar classic retail side, which, at least to some extent, some pockets of the market have seen headwinds in that field. Then distribution, actually quite similar. You've got the more global international distribution hubs, which have seen headwinds because of travel restrictions and supply chain disruption to some extent. So headwinds there. But then you've got the more national, local, regional distribution centers, urban logistics, these kind of things. Those haven't seen any negative impact at all. And then you've got the manufacturing side, which is quite an interesting one. Here, of course, you did have, on most parts of the market, seen headwinds through COVID, but I find this subsector of the logistics field very interesting, because particularly the light industrial part often flies under the radar of many investors. But if you think about it, it is actually stemming a large bulk of the overall logistics space out there, especially in a country like Germany, for example, with its broad manufacturing base and all the small and medium sized enterprises. So it is actually quite an important part of the market. But let's have a look at the e-commerce side now, because that is really the part of the market that was driving a structural boom of the logistics universe. And that is the reason for that is actually quite simple. There's a couple of analyses out there saying that for every additional billion euros spent online, you will need 75,000 to 115,000 square meters of net additional logistics space to fulfill that new requirement. And in this chart, I'm showing the general retail sales in billion and the e-commerce retail sales in billion. And what is more important actually is the black line, which is showing you the growth in e-commerce turnover in billion. And if you just look at the period between 2015 and 2019, on average, roughly 8 billion of new euros have been spent online. And this year, 2020, annualized, is actually on track to exceed 16 billion. And these numbers are for Germany alone. So it's much larger, much wider in a big European comparison. And you know, this is fostering the to some extent the boom that we've seen in the logistics field, and driving different sorts, different types of logistics facilities, starting from the super large first mile distribution centers, going further down to regional centers and into the cities, basically, to more urban distribution centers. Now let's have a look at how the e-commerce landscape looks like in Europe. That's what what I'm showing on the left side of this slide. So here we have the share of overall of the e-commerce side of the overall retail universe, and generally that share is between 10 and 15% in most of these countries, going up to 20% in the UK, or it's even a little higher now. These are 2019 numbers, where the UK is the most mature market in this respect, of course. And if you look down to the bottom of the list, you've got the more peripheral country, you've got Italy, you've got Spain, you've got Portugal, which are more like 5%. So as an investor, and this is quite an interesting take on this, you do, of course, target the more mature markets, the larger markets like France, like Germany, like the UK, where you've got the infrastructure, where you've got the product, where you've got the knowledge, where you can actually invest your money. But it's also very interesting to consider markets like Italy, Spain, and Portugal, just assuming that these markets might see a catch-up to the wider European average. So if that happened, there's quite a decent growth in e-commerce spending still to come. And actually, this is quite similar when looking at the different segments of the retail industry, which I am showing on the right-hand chart here. So clearly, the highest share of online retail is in the consumer electronics, in the fashion and leisure and hobby segments, and by far the lowest segments you've got in the fast-moving consumer goods space. So that's basically your grocery shopping, that's food, that's drugstore articles, things like this. But now an interesting fact here is that the fast-moving consumer goods, the grocery market during the pandemic, has seen by far the largest growth rates of any of these groups. So there's a lot of growth that did come through over the last 6 to 9 months in this field. And if history is any guidance, money that has gone online, has gone to e-commerce in the past, has rarely gone back to the brick and mortar retail. And I think that is actually a factor to consider going forward, that there's more growth to come out of this fast-moving consumer goods space, which will continue to drive demand for logistics facilities, specifically for urban logistics facilities, because you need to be close to the consumer to fulfill this specific niche of the logistics market. Now, that was more the structural side. Now let's have a look at what happened during the pandemic. So let's have a look at the cyclical side here. And what we have in this chart is the take up of the of Europe, or the 6 of the largest markets in Europe: Germany, UK, Poland, France, and the Netherlands, and Spain. And interestingly, other than pretty much all other commercial real estate types out there, leasing activity in the logistics space has actually increased this year compared to last year. So it was up by 7%. That's in stark contrast to definitely the retail side, but also offices tend to be down by 30 to 40%. So logistics has proven to be a very, very defensive sector in this respect. Of course, there's some caveats to be made. First of all, that increase, or that take-up distribution differs among countries. There's countries like the UK or Poland where it has been very strong, while there are other markets like France, Netherlands, or even Germany a little bit, where the performance was a little lower. But generally, logistics in Europe are very, very defensive market. Now, more interestingly, probably is an outlook. How do we expect this to pan out over the next 9 to 12 months? And honestly, this is an extremely difficult call to make, because of course the logistics sector is not immune to the overall economic environment. and I'm pretty sure that we will face economic headwinds generally on the consumer side, on the labor market side, on the overall economic side. There's going to be headwinds well into 2021, and this will, of course, to some extent dampen demand for the logistics space. On the other hand, you have quite strong tailwinds in the logistics universe as well, and some of that are already mentioned. The strength of the e-commerce and growth of e-commerce, that's one part of the story. But in addition, also strengthened by COVID again, we've got now trends like reshoring and nearshoring is gaining in importance. So companies are stockpiling their warehouses, so they're not dependent on production just in time, so their production chain is not disturbed. And actually what we're seeing is that some of the manufacturing of the industrial production is also returning, or companies are thinking about returning that to some extent from outsourced operations back into Europe. So basically manufacturing is coming home. And what does this mean for the rental side? So this is what I've plotted in this graph. Typically, historically, the logistics space has not been a sector of strong rental value growth. It was more or less flat for many years. Of course, there's exceptions, but generally, the logistics space over a century basically has been relatively flat in terms of rental values. Now that has changed recently over the last 5 to 10 years, largely driven, of course, by the strength of the e-commerce and growth of the demand for logistics space that brought with it. And another interesting trend that came with the growth of the e-commerce side is that logistics facilities have moved closer to the cities, closer to the city centers. And doing so, the land value increases. And for many logistics leases, the rental value paid is still sort of a combination of construction cost and cost of land. And as you move further to the cities and city centers, higher rental values are achieved in the logistics space. What's going to happen to rents going forward? That again very much depends on how the balance between headwinds and tailwinds from a structural and cyclical side are going to pan out over the next couple of months. I wouldn't be too optimistic that rental values will grow though over the next 12 months. I would expect pretty much a stagnation at a high level, and dependent on the individual location where you are. Dependent on the individual location where you are, that might actually increase or decrease, just dependent on the type of driver behind the individual location. Now, let's have a look at the logistics investment market, at the investment side. On the left chart is showing the overall transaction volume for Europe, broken down into the largest markets across Europe, and that's a 12-month rolling total. So it does include also deals that happened like 10 months ago. But still, what you can see here is, yes, there was a dip, a COVID-related dip in transaction activity. But to some extent, that was also due to very practical reasons, that it was difficult to do site visits, that was actually difficult to see people, and that, of course, was dampening overall transaction activity. But the demand side for logistics, and that is not a big surprise, acknowledging all the facts and the growth that we've seen earlier, the demand side for logistics space is actually still very strong. Because of the rise of e-commerce, the logistics sector has gone up higher in the ranks of investors, of institutional type investors as well. And COVID-19 actually only strengthened this. So this is a sector that gained in popularity among investors because of what happened during the pandemic. And the result is pretty much, well, first of all, you can see in the right-hand chart, which is the prime logistic yields for the major countries in Europe, that there has been a lot of movement, and that is mostly based on the structural strengthening of the sector that we have seen. And right now, we are at yield levels in core Europe, somewhere around 4%. If you go to the more peripheral locations, Italy, Spain, these kind of things, Southern Europe, you're more in the 5% net initial yield range for these type of assets. So that was a quick overview of what happened on the leasing side, on the investment side for the logistics market. The last couple of minutes I want to use to discuss more structural things, more, let's say, an outlook, also considering disruptive tendencies that we are seeing generally. Because we as a society, I think, are going through the most disruptive times that we have seen in human history, basically. Things are changing quicker than they have ever before. And of course, the entire real estate industry is going through structural change as well. And that is what I want to say with this slide, basically. So if you follow the dotted line here, this is basically where we are today. And with the individual arrows, I want to highlight where the individual sectors are in terms of their process going through a structural change. So the further the blue, the further the process of structural change. So that means looking at retail, which is pretty blue, we have gone through a lot of disruption and a lot of structural change in retail already, which was kickstarted by the growth of the e-commerce sector. Looking at offices, we're pretty much right in the middle of that phase. So we have seen over the last couple of years the rise of the co-working operators, for example. They are changing the way that we are working, making it more flexible, adding more services to that landscape. And more recently, we were all forced to work from home. So that has given a big boost in terms of the mobile working. But for logistics, even though we have seen a structural strengthening from the e-commerce side, I think from a technical point of view, there's still a lot of process to come. There's still a lot of things before us. And on this slide, I just wanted to highlight a few examples to showcase what I'm talking about here. Some of these are already in place. Some of these are tested. Some of these, well, are a glance into the future, to say so. So if we're looking at the left-hand side of this slide, we've got, for example, the DHL distribution into the trunks of your cars. So DHL has some sort of general key to cars, and they can put the packages into the trunks of the cars. This is in operation right now as a test balloon, to say so. Then we've got all sorts of drones, airborne drones, earthbound drones, which are also in operation, still tested, but basically do function. If those are being rolled out or not, well, the future will tell. Then we've got fully automated, let's say, the next generation of distribution centers. This is an example of Ocado, a grocery retailer from the UK, and they have fully automated their logistics warehouses. And these tiny robots that you see there are actually run by air traffic control systems. It's that difficult to get this operation in the warehouse run, that you need air traffic control systems to run them. And if you have not ever seen a video of Ocado distribution centers operating, I recommend doing so. It's like watching a lava lamp or something. It's very hypnotical. It's great. Then looking at the right end of the slides, you've got, for example, where a lot of research and development is going in now is, of course, autonomous driving. And that is not only autonomous driving for us as passengers, but it is also for lorries in freight. And if that was to happen and to materialize in a large scale, that would, of course, also have consequences for your location choice, because you're not dependent on the lorry driver anymore. So you're not dependent on sleep times anymore. So you can really go like a 24/7 workday for these lorries. And on the top right, not sure if you can see that perfectly, but that is an Amazon airship. It's basically a mobile flying distribution warehouse that spits out the little drones, which will distribute the packages to the customers. Now, this is a fake picture, so it's not real. It's done by a Japanese artist. But the interesting fact behind is that Amazon does actually own that patent. So they do consider and research this possibility of next level of distribution. If that will come or not, who knows? Probably not, is my guess, but who am I to judge? But generally, all these trends and technological change that is still to come makes the logistics space a very, very interesting one. And you have to, if possible, consider even some of these unknowns into your investment decisions. How do you do that? For example, by really figuring out what are important drivers location-wise. So you need to focus on strategically important locations from a macro and a micro perspective, and also technically wise. Speaking about the building itself, it should be as flexible as possible, so it can adapt to whatever technological change will come in the future. So you can actually incorporate that into your logistics facility.